Could ASML lose 30% of its revenue overnight? This one decision could transform the entire semiconductor industry. Is there still potential for investors? In this video, we're diving into all possible scenarios for ASML's future, factoring in growth prospects, risks, and the China factor. Stay with me to discover why I believe ASML is a strong buy right now, despite the challenge. Current situation. ASML's exports of the critical EUV machines to China have already been restricted to slow China's development in sophisticated chips. The US, however, published new and updated regulations on exports, further restricting technology exports to China. This could negatively impact ASML's existing exports to China, should the Dutch government once again comply to the US guidelines. Considering that, as of Q4 24, 27% of ASML's revenue was generated in China, investors and analysts are understandably worried that potential trade restrictions could weigh heavily on the company's future. To analyze the potential downside in this scenario, we will first look at the regular bear, base, and bull cases, and then analyze the China risk. Regular scenarios. For these scenarios, we can mainly rely on the latest guidance for 2025 and 2030 of the management. 2025. For 2025, the company presented the following outlook in their latest earnings call. This results in the following anticipations for our three regular bear, base, and bull cases for 2025, 2030, and beyond. For 2030, management gave the following outlook on the Investor Day in 2024. Taking these assumptions, we get the following revenue growth rates and margins for 2030. I also assumed that the predicted growth rates will stay at these rates for 2031 and 2032 to expand our analysis time horizon to 8 years. I also anticipated that the profitability and cash flow conversions stay constant at the average rates of the last 3 years. Bear case. With these assumptions and the low range of management's expectations, we get a fair value market cap of $280 billion, indicating that the company could be overvalued by just 5% in the regular bear case. Base case. Assuming the middle of management's expectations for 2025 and 2030, we get a fair value market cap of $355 billion, indicating a potential upside of 21%. Bull case. Calculating with the high end of the outlook, we get a fair value market cap of $420 billion, resulting in a potential undervaluation of 42%. These three scenarios, however, don't factor in the biggest risk: the China factor. Like mentioned in the beginning, there is a realistic risk that the US could try to prohibit ASML from supplying the less sophisticated DUV machines to China. ASML is currently generating a meaningful share of their revenues through China, especially in 2023 and 2024. This proportion was significant. ASML's CEO claims that this share should normalize in the following years to around 20% because of backlogs in the previous years. To nevertheless factor in the worst case, I calculated the bear, base, and bull case with losing 27% of the revenue in 2025 due to trade restrictions. The other assumptions were identical to our regular scenarios. This led to the following valuations for ASML. Bear without China, $206 billion, 30% overvaluation. Base without China, $262 billion, 11% overvaluation. Bull without China, $308 billion, 5% undervaluation. So even without any business in China, the company could still be trading in the somewhat fair value range. How realistic is the ban? The Netherlands needs to protect its own economic interests while trying to balance their commitment to both Europe and the United States. By the implementation of export restrictions on NVIDIA chips, for example, and requesting that ASML cease supplying its cutting-edge chip-making machinery to China, The United States seeks to restrict China's access to AI-related technologies. Nonetheless, the Netherlands should be careful about enforcing export restrictions that would needlessly hurt its own economy. Trump's harsh economic and external policy could also lead to more cooperation between China and Europe. I, personally, believe that the likelihood of an extension of the ban is very low. The provision of the DUV machines in no way represents such a competitive advantage as the EUV machines from ASML, which makes the ban pointless. What do you think? Will the US further tighten restrictions? Or is this fear overblown? Drop your thoughts in the comments. I respond to everyone. Conclusion. To summarize, we have the following under and over valuations for ASML, considering our 6 scenarios. Even in the rather unrealistic scenario of ASML's future without any business in China, the company is reasonably valued, taking the bear and bull case into account. Due to this and the high-quality business model, with long-term tailwinds in AI and the unique market position as a monopoly controlling one of the key technologies for the next decade, I currently rate the company a strong buy, with a medium-term price target of $850.